Back in high school economics, I remember a project where we would hypothetically invest in a stock. Now the idea was to research the company, build a financial analysis portfolio, and well, learn about investing. However, all I was concerned with was the biggest return. So I went home and I asked my dad, "Dad, what should I do to get the biggest return in the stock market?" And well, he said, penny stocks. Now he explained to me a few things, blah, 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 but what I took away from this is, say you have a stock that is worth 1 penny. Well, if I invest $1,000 into this stock worth 1 penny and it goes up a little bit, say by just a penny, well then I have $2,000, essentially doubling my money, 100% profit. How could this go wrong? So I ended up picking a generic penny stock for my project and got a C+. However, my penny stock actually did go up 150%, but I got a C+. I guess I was supposed to do more research on the company, whatever, I completely understand. Anyways, whatever, because now this is real money and I'm investing in real penny stocks. Will I turn that 100% profit, doubling my money, even more? Let's find out, but you gotta focus. Now, it might be a little bit more complicated than just the simple math like that, as we'll find out during this experiment. Anyways, to get started, according to a simple web search definition, a penny stock refers to common shares of small public companies that trade for less than $1 per share. Now, in my opinion, there's a better metric to look at other than share price to identify potentially volatile penny stocks, and that is market capitalization, which is just very simply the total dollar market value of all a company's outstanding shares. That's just the share price multiplied by number of shares. And I kind of see this as like the value of the company. And if you just look at this formula, you can see that the share price is actually dependent on market capitalization. And if the market capitalization doubles, well, then the share price doubles. Now this is assuming the number of shares issued stays fixed, which doesn't always happen, but typically this would be a process and require approval from the shareholders. And because I'm not going to be holding on to any of these penny stocks for too long for this experiment, I am just going to assume that's not going to happen, hopefully. So why could this be important, and what exactly am I looking for in a company's market capitalization? Well, let's pretend I invest $1,000 into 2 companies, Company A and Company B. Company A has a market cap of $1 million, while Company B has a market cap of $1 billion. Now let's pretend both of these companies see their market capitalization increase by $2 million, which we can think of as a $2 million increase on the valuation based on the buyers and sellers of the stock. Now this amount would essentially triple the market cap of Company A, thus tripling the stock price, thus tripling the value of my holdings. However, for Company B with the $1 billion market cap, an increase of $2 million based on the simple formula is only a 0.2% increase, therefore only affecting the stock price by a 0.2% increase, and thus my initial investment by a 0.2% increase, which in this example is only $2. Now before you get too excited, this volatility does work both ways. For if Company A's market capitalization decreased by $500,000, this would hypothetically cut my holdings in half. Now, if Company B with the bigger $1 billion market cap experienced a $500,000 loss in market capitalization, this would only reduce the value of my holdings by 50 cents. Now, I will be looking for companies like Company A, but just understand, in this scenario with potential greater reward comes potential greater risk. Now, aside from all of this math, probably more important to hopefully be profitable in this experiment, I did a lot of research trying to identify penny stocks of companies that had the theme of like innovation and potentially becoming a bigger company one day, like buzzwords, slogans, etc. that I felt might attract new investors, thus increasing the market cap and the stock price, and hopefully the value of my holdings. Would it actually be that easy? Anyways, enough. It's time to invest. Now, I have been doing a ton of research trying to pick the right pick to hopefully make a profit here, but the reason I chose this because it kind of combines 2 of the 8 most volatile sectors according to Investopedia: technology and healthcare, or biomedical. Blah blah blah. For the first pick, the stock I'm going into has the ticker WGS, or GeneDx Holdings Corp. And by the way, I wish I would have just got into it about 5 minutes ago because it looks like it's starting to climb now, so apparently they're going to be using AI-driven health intelligence platforms to synthesize clinical and genomic data to deliver comprehensive health insights. So the way I'm reading this is they want to use AI to interpret the genome to diagnose things, and health, medical, AI, buzz term. Come on, you know what I'm saying? It's gotta go up, right? Oh my gosh, it went up so much. Oh, it just keeps going up. Dude, I am upset, man, because I was gonna get in this and it just goes up now. Like, I just need to stop talking and investing, man. You shouldn't buy when it's going up so rapidly. All right, let's see what we can do. I'm gonna buy 100 shares. All right, it's gonna be $819. I'm doing it. And we're down $4 right now. I think that was due to fees. All right, we are in, baby. Now, this company had a market cap of a little over 200 million, still below our $250 million market cap threshold for identifying penny stocks based on our definition in this video. However, for my second pick, I wanted to try out a very small market cap penny stock for that potential greater volatility in price. So for my second pick, I'm actually gonna do something a little more lucrative and degen. There's a financial theory called mean reversion, and that's basically just the idea that an asset price will eventually return to the long-term mean or average. But to break this down and literally just make this as easy as possible, I'm gonna pick the worst performing asset of the day that I can buy into and hope that all of the red will maybe turn a little bit more green over the next 24 hours, a bounce off the bottom. And I'm hoping to catch it as it's bouncing back up. It might be a bad idea, it might further go down, but I just really do want to see what happens. So if I go to stockanalysis.com, I go over to stocks, stock screener, and I go to percent change and I click up. So I get the biggest drop in the last 24 hours. I think that's 24 hours, I hope. I see right here, there's a stock with a ticker ACON, a Clarion Inc. And it has a market cap of only 677K. So that's under $1 million. That's a really low market cap. That means very high volatility. And if all of a sudden money gets put back into this, it's not gonna take much relatively to double the stock price based on the math, right? So let's check it out. It does look like it, oh man, this is a bad idea. The reason I'm thinking this is because it does look like it is in a super downtrend here, right? I just kind of want to see what will happen, and you know, maybe we will get a little bounce off the bottom here that we can sell out like maybe within a day. So we just got to take a risk, we got to try it out. Let's pray we get super lucky and it just really bounces. That'd be sick. So I'm gonna do 300, what's the lucky number? 365 for the days of a year. All right, market order, should I do that? Only limit orders. Okay, so we'll do a limit. What's the limit price? We'll set the limit price for exactly what it is right now, and we're gonna place that order. So that's my second pick, that's what it is. Hopefully this gets filled. I'll keep you guys updated on everything. This is gonna get interesting. So the order actually ended up getting filled quickly. However, where I actually experienced the most volatility, and luckily towards the upside, was in WGS. I'm up $20. In literally just a few minutes, I was already up $21. Well, it looks like I made a good pick. Hopefully I wouldn't let this get to my head, but we'll just have to wait and see. Now, when it comes to the worst performing stock that I picked, hoping it would bounce back up off of the bottom, well, that may not have been such a good pick after all. For by day 2, my investment into this one was already down nearly 10%, and I was still worried the bottom wasn't even in yet and I would continue to lose on this. So trying to salvage this, I attempted to sell out of this for as little loss as possible, but as quickly as possible. And to do that wasn't just as easy as pushing a button selling at a market order for the current price of that stock. Because of the low price, I only had the option to set a limit order, which allows me to set the price at what I want to sell it for, which can be a good thing in certain instances, but if I set the price too high, then nobody would buy it. And if the limit order stayed open all day with my price being too high and the stock dropped even further, well then I would have to reset a limit order even lower, losing more money, and I really just wanted to get rid of this as fast as possible. So in order for me to get this to trade within a minute using a limit order, I actually had to set the limit order price 1 cent lower than the current market value of the stock. So I managed to get out of ACON. It just appeared like it was continuing to go down. I ended up having to go 1 cent lower to get it to actually sell with a limit order, and ended up losing an additional $3.65 because I had 365 shares. Math. But anyways, on a positive note, WGS looks like it's actually doing decent. In fact, my overall portfolio right now is up $15. That's right, we canceled out that loss and then some. However, I am not gonna sell WGS just yet. I want to kind of sit, wait, and maybe try and examine the chart a little more like I know what I'm doing. You know what I mean? Why do I suck? Everything's good when it's green, but then when it turns red, it's like your whole mentality changes. So I should have sold out of this yesterday when I was up $20 because now I'm down over $20. So what the heck is going on? If we look at the overall market, the S&P 500, the Dow, the NASDAQ, it does look like everything is a little bit red. So maybe that is trickling over into our penny stock, making a bigger impact on that. So option A is, do I just stay in this penny stock the rest of today and wait and see if the overall market turns around and that carries this back up and makes a big impact and maybe carries me into profit again? Or do I jump to plan B, take my losses now, sell this penny stock, do some research, and try to find another penny stock that might explode in the next day or two? And I know it's always human nature to dwell on the what ifs, but I literally just ran across this Vivanti medical penny stock, and as of today it's up 300%. That would have turned $1,000 into $4,000. And by the way, when you do the math, 300% times 1,000 would equal 3,000. But when you interpret percentages in the market, it's usually interpreted as a plus percent. So a plus 300% would be the initial investment plus 300% times that initial investment, so it would be $4,000, which would be insane to have made in one day with a penny stock. I'd be jumping off the walls. But hey, you can't dwell on the what ifs. The only question is, what do I do? Do I hold and wait and see if it recovers, or do I sell out, do some research, and try to find something like this Vivanti Medical? Hopefully, I gotta figure that out. Well, I decided to hold for the rest of the day, and WGS continued to decline, bringing my total portfolio value to a near $50 loss. And silly enough, on top of this, a Clarion, that super low cap penny stock I just sold out of, bounced back up. So it's crazy, some of the top performing penny stocks in the last 24 hours have been these like biotech like pharmaceutical tech like companies, just not the one I went into. Anyways, to lighten the mood, if you guys haven't seen already that crypto investing challenge video that I posted a couple of weeks ago, well, if I would have not sold out and just held on to everything, right now I'd be up over $300. Alright. Anyways, over the past couple of hours, I've been really diving in and researching some of the most volatile penny stocks out there right now, and something actually very interesting that I found out, maybe I should have known this sooner. A lot of these companies classified as penny stocks based on market capitalization. When I look at the charts but actually zoom out, oh man, like the trend is so bad down in the long term. Overall, it does look like most of these are in a downtrend, which got their market cap low. Not necessarily they started out low and are trickling up higher. So what I'm thinking is my strategy for holding something for a long-term hold, even though it would only have been a week, might not be the best strategy. I think I need to be more aggressive on my trades. For instance, if I would have sold out with that $20 profit on day one, well, I'd be up $20 rather than down $50 right now. No one can predict the market. All I'm saying is I want to switch up my strategy. I'm going in aggressively. So we'll see if this works. So on day 4, after selling out of all of my penny stocks, rather than just buying into something new right away, I wanted to do some additional research before I made my more aggressive buy and sell attacks. And upon my research, what I found was that these biomedical penny stocks seem to be the biggest changers for the upside. So for my attack approach, I was going to combine my two previous approaches, looking for promising sectors, which on this day was looking like it was biomedical, and trading based on mean reversion. So I would search for biomedical penny stocks that took a significant 24-hour hit. However, I would make sure those ones, when you zoom out looking at about the month time frame, they would be in more of an uptrend. I would interpret this as more overall upward momentum on a longer term time frame like the month, and assume that the 24-hour dip is just a brief sell-off, so hopefully catching it at the bottom of that sell-off and making a quick profit. It looks like it's working. recovered almost all of my value. Almost $43 of recovery right there, baby. Okay, I think I learned my lesson the first time, so what I'm gonna do is actually sell out, look for another one just like this, and do this again. Just do this, alright? Because that's what we're doing it. And just when I was ready to get in the swing of this hopefully exciting upward momentum of buying and selling, I ran into an unfortunate issue. So there's something called the pattern day trade rule, and what that is, if you have a margin account and it has less than $25,000 in it, well then you're not allowed to make more than 4 day trades in a 5-day rolling period. And I'm like, why the heck is there even this rule? So I look into it and it really actually sounds kind of condescending. It's to help protect novice investors from large losses. So you're telling me I have to have over $25,000 in a margin account to be able to be a day trader? Because if I had less than that, then that makes me a novice investor. And I mean, wouldn't your loss be bigger if you had more money to lose? Anyways, I should actually be immune from this rule because it doesn't apply to cash accounts. And the account I'm using to trade these stocks on is a cash account. The only problem is when selling a stock in a cash account, apparently it can take up to 2 business days before that cash settles and I basically can reinvest that cash into something else. So I just bought and sold out of Lex. I made a profit for the trade, but that cash is being settled and I can't make any more trades for at least today. And then to make things worse, the weekend doesn't count, so I have to wait until maybe next Tuesday before I can even buy or sell any more stocks. So I ended up going on like a 10-minute rant about rules that I don't like. But I mean, hey, rules are rules, right? Anyways, it appeared like I had to wait at least a few more days before I'd be able to invest in any more penny stocks. And I know what you might be thinking, bro, quit acting like you know what you're talking about. I mean, look at all of the avoidable slip-ups you just made. Seriously, stick to the fitness content and leave investing to the pros.
Yeah, we're not like these other guys, you know, big suits, intimidating, pretty chill, pretty cool. Keeping it reol. Like seriously, like just last night I was out with Tom, our CFO, and we just like totally went out clubbing. It was like crazy, man, like totally crazy.
Oh, yeah. Oh, cool.
Yeah. Anyways, enough about that. Let's get down to it, all right? So, what would you say is the current value of your portfolio?
What's a portfolio?
Seriously, bro?
Well,
No, it's all right. It's okay. It's like the fully to your port. That's how I like to think about it. Anyways, what we do here is we take like a lump sum and you should be investing 30% of it. Let's just put it that way. You should be investing 30% of it. How much do you have in savings? That's a
savings. Yeah, savings
account, like bank account. You know,
savings right now. I have about $300 saved up.
Wait, that's it? Frick. No, that's okay. No, that's totally good. Hold on, let me just. So if we take 30% of 300, hold on, 300 times 10. Wait, divided by. Hold on, bro. Okay, you know what? We'll figure that out later. Anyways, what I'm saying, bro, is if you sign up right now, we're running a 5% off special.
Well, actually, I have a few questions before we get signed up.
Yeah, shoot. So yeah, no, I had a few questions here. I was just wondering, like, what exactly are the investments my funds will be going into? And then also, like, I'm wondering. All right, sorry, bro. Keep going. Yeah, no. So then I'm also wondering, like, this creature. No, dude. I totally get you, bro. I totally do. Seriously, we have a website. It's like it's got like AI and like, dude. And just between you and me, I literally have been using it to write text messages to my girlfriend. She can't even tell. Like, it's crazy. She's like, dude, you're like so romantic. I'm like, thanks, babe. Like, totally AI. You know what I mean?
Yeah,
dude. Oh, and like, you know, like, yeah.
Oh yeah. Oh, cool.
But seriously, bro, like totally chill. Like totally chill. Like seriously, totally chill.
Totally. Like,
let's get the paperwork started, all right?
Yeah.
All right.
Yeah.
And I'm gonna need your ID.
Oh yeah. No, for sure.
And a credit card.
Alright guys, it's Tuesday, the final day of this experiment. I've got one more trade and one more sell. At least that's what I'm going to do. I'm going to go all in, the full amount to one penny stock. One shot, one more chance, one opportunity. Don't let it slip. Let's make my dad proud. Mom spaghetti. And that's exactly what I did, going all in on a penny stock with a market cap under 500K with a market price that was a fraction of a penny. On top of this, it was a crypto-related penny stock called the Crypto Company. Now, unfortunately, I was getting in a little bit later in the day and it already climbed 40%, but I figured because crypto's momentum was going upwards rapidly, this stock might see a continuation in its surge. And right after I bought in, the price went up. But the increase in price may have actually been my effect on buying into this stock because of the very low market cap. What am I talking about? So that's something I really didn't touch on. I've just been using very simple math. But when there's buyers and sellers, if I am going to be buying something, I'm going to be filling the orders of the sellers. So say I want to buy more than this guy is selling. Well, I buy all of his, and then maybe I have to go the next level up in price to buy what this next guy is selling up here. But by going up the ladder, you can actually affect the price. So if I buy a crap ton, I can actually drive the price, the market price up. And because this is so small, I might have just affected the price, I don't know. But the truth is, if I tried to sell everything, because the market cap was so low and there are so little buyer and sellers, I might be only selling a little bit at this current price that's a little bit higher than I bought it for, but then have to dip back down to sell the rest of it and maybe even down further. So I actually might lose money. But just based on that formula and based on the current market value of this penny stock, the value of what I'm holding based on the market spread is up almost $8. You know, this is the last day of this experiment, but I'm actually going to wait this entire day. I'm going to wait till tomorrow to sell it. And hopefully something crazy happens in the crypto space, good-wise, that'll drive this stock price up somehow, some way. We can only pray. Yeah, because it's looking red right now. Would this final penny stock pick recover my portfolio and put me in the green? Well, after one day of anxious waiting, it was time to end this experiment, sell it all, and see what we were left with. Literally yesterday, this got to over $100 loss, but it looks like Bitcoin recovered, and maybe that recovered faith people had in this penny stock or something. So what I'm gonna do is I'm gonna attempt to sell out of this penny stock. Hopefully selling out, like I mentioned before, doesn't affect the price too much on our way out. So hopefully we'll get to keep the majority of our gains. It's like I wanna wait all day and be like, yo, could this double our portfolio? But I learned my lesson, don't get greedy. Almost $100, I cannot believe it. An experiment where we actually did it. Who am I clapping for?
Oh.
Hey, what's up, man? So I took your advice from long ago, you know, from, man, back in like high school when you told me to invest in penny stocks.
Oh, jeez.
Yeah, man.
Yeah. What did you invest in?
I went in all this week. I went in a couple ones, some biomedical ones, lost a bit of money, but then just yesterday I recovered it all back and then some, and I'm $96 up right now.
Oh, jeez.
Pretty cool, huh?
No, stupid.
What?
It's stupid. Why don't you just put it on red or black in a casino?
Shoot, yeah.
All right, so what you ought to do, you got to buy the stocks when they're low.
Yeah.
And sell them when they're high. That's how you make money. Buy low, sell high. Have money coming out of our back pockets and everything. And he says, everybody get your money in it. And now it's like $10. We don't know what happened.
Oh, man. Dang.
Point of a penny it's worth.
Yeah.
All that has to do is go to $1 and we'll all be filthy wealthy.
But man, are you proud of me, man? I got out $96.
Yeah, you know, $96. That's awesome.
Thanks, man. I appreciate it. I just needed that validation.
I'm just going to walk out of here laughing at it.
Hey, that's what's up, man. You just gotta...
Yeah.
All right, man. Have a good rest of your day.
Talk to you later.
Talk to you later, man.
All right, bye.
Bye. Love that guy. I hope you all enjoyed this video. I hope it was entertaining. I'm super stoked. I'm actually $96 up. We can now take this amount and invest it in another financial challenge. I have a very lucrative idea I want to retouch on, so stay tuned for that. I'm hoping big things here. And real quick before we end, once again, none of this video was financial advice. Also, I want to make it clear that nobody can predict the market, and none of this was intended to portray any of these companies in a negative or positive or in any light other than just the stock price and what happened to it over the course of this experiment. Thank you all so much for watching. I hope you all have a great day. Don't forget to subscribe. Peace. I will see you all in the next video.